So I'd now like to welcome to the stage the Capital Appraisal panel. So Susan Davy from South West Water, who'll be chairing the panel, accompanied by Gregor Alexander from SSE and Richard Mayfield from Walmart EMEA.
Thank you, Sarah. As Sarah noted, A4S's work has been focusing on how sustainability and balancing social, environmental and economic issues can be integrated into decision making. As a finance leadership network, we have looked at the strategic context for financial decision making and how certain projects may be a catalyst to thinking differently, and that's what we need in this area, is how do we think differently? And how could we develop a practical toolkit? So in particular, when considering future-proofing financial decisions and decision-making, a practical area of focus for all members was how we might seek to hardwire sustainability into capital expenditure and infrastructure spend activities. So why is that important? I mean, Sarah touched on it just now, but as financial professionals, it's our responsibility to ensure our organisations are equipped to make good investment decisions. Capital investment decisions, by their nature, lead to actions which impact not just on current but future generations. And indeed, as infrastructure providers, of which my company is one as a water company, the amount of infrastructure expenditure that is anticipated, as Sarah noted, is going to increase over the coming decades, not just here but globally as well. And we need to ensure that this expenditure is fit for purpose, and that is absolutely vital, especially when implied asset lives and investment legacies can stretch to over 100 years. So as finance teams, we strive to ensure we are delivering investments that provide benefits to companies, customers and shareholders. However, to date, you could argue that capital investment decision-making approaches have focused on measuring traditional business risks and financial impacts. And yes, these may have driven good financial outcomes for now, but could we and should we think about how information on social and environmental impacts could be incorporated within those decisions? So, an important area to focus on. So I'm going to turn to my fellow panellists here now. Quite a diverse team here. So we have retail and we have infrastructure. And really ask them why they think integration of sustainability into CapEx decisions is important. So perhaps if I turn to Gregor first.
Yeah, I mean for us, about 8 years ago, we actually embedded sustainability in our 6 core values, and that's what our 20,000 employees look at every day. We are spending £1.5 billion a year. Carbon, waste, water, they're all key parts of our decision-making already. But we're going further in that area. We're looking at some of the softer areas where there are alternative kind of valuations. So, for example, Andrew mentioned what Grid are doing and replacing pylons. Actually, at the investment decision stage, getting to a position where we can differentiate and value the difference from undergrounding and putting overhead lines up. I think, when you're dealing with long-term assets and we're a long-term business, it's not the profits we're making today or even tomorrow, it's the profits in the medium to long term that we need to look out for. So we've always, as a business, felt that sustainability is key. It's not just about the environment, though. It's also about the social and the economic issues, and particularly when you're doing big CapEx projects, that impacts on communities. And you need to make sure you bring communities along with you. 10 years ago, you just built. Nowadays, you need to engage.
Thank you, Gregor. Perhaps turn to Richard and your take on that.
I'd go one step earlier, actually, because I think one of the things that's important, even before you get to CapEx, risk management, and frankly any financial process, is that if you as a business are not already taking sustainability as a strategic imperative, then frankly making it important as part of your capital investment appraisal process is going to be pretty difficult. So I'd say that's almost a prerequisite. It needs to become a strategic imperative. Why is then CapEx important? Well, I think the numbers, first of all, tell you. So the 9 trillion spend that you just saw, I mean, actually it's about 4 trillion a year now. It'll be 9 trillion in 2025. So probably the biggest new impact that we as business have on the environment is in the infrastructure spending we make. Certainly as retailers, probably our biggest impact is in 2 areas, really. We build a lot of stores, although if you're a UK retailer, you'll probably build a lot fewer of them going forward than maybe we have in the past, as John will tell you if he's at the back there somewhere. But also in terms of supply chains and the impact that we have around the world in terms of where we source our products. In terms of some indications of why that's important, we've had some information about the fact that a few years back most of us thought it was unimportant because it didn't have an impact on business. So just a few numbers. They are economically proven. So both John and I would say that we get some of our quickest payback and highest returns from energy-related projects. If I look at our stores today, then they use 58% less energy than they did 7 or 8 years ago. And in fact, if I look at energy specifically, 2 of our key initiative or planks behind our strategy is to consume less energy and to generate more energy ourselves. 2 things that Gregor really doesn't like me for because we buy a lot less from him as a result. So I think the point is that CapEx is probably one of those processes which is going to have the biggest impact on the environment. What I'd say to you is that whether you take a purely your own company's view or a more whole supply chain view, then there are real economic benefits, proven benefits to some of the things that we do, whether that's LED lighting, whether it's ground source heat pumps. So there's real economic benefit. But the other thing I'd say, it goes back to the point that Andrew made about thinking more to the long term. If we're not thinking in our businesses about the impact on supply chains, about the impact of shortage of water on some of those supply chains, and indeed about the PR risks that we run as a business, then I'd suggest to you that probably in 10 years' time, your business may not be here because those supply chains will have, to coin a phrase, will have dried up.
Okay, thank you. Thank you, Gregor. Thank you, Richard. I think hearing what you're saying, thinking back to the discussions we had on the network and why we thought it important to do something in this area, you've articulated where you can see cost savings and benefits that have been made for both your organisations. But at that point, we didn't see that it was the norm, so we thought we'd launch that project to look in that area. Why do you think it's not the norm then, if you're thinking about your businesses and how much you're embedding sustainability? Why do you think there's a need to have this framework and to have done this project?
Well, I mean, you've got the document there. I mean, it's 30 pages, and it's a really good document. The team, and it's a reasonably big team. We all put some of resources from the companies in to do that, and working a considerable amount of time. I think it's a very readable document. Not all companies are focused in the same area. You can see by some of the responses that we've seen in the past and even in the current, the percentage is still a bit low. I mean, I think it's important that we're not going to kind of get to the solution, in the next couple of years. But it's important people start the journey, and getting that leadership at the right level, at the CFO level, taking it at board level, and driving it through the organisation is key. I think the booklet we've come out with is very good. It gives very good practical examples of where companies have had issues, how they've resolved them, how they've taken them forward. And the next step is then to get to decision making. How do we get pound note values on some of those more qualitative issues in companies' investment appraisals, so that there's no debate had. You've got clear facts, and it's a bit like what Puma have done in their EPL. So I think it's a great first start. I think the sharing that the companies have had It's been very good. And going forward, we need to make sure that we can kind of pass that out to a wider group.
Okay. Any thoughts, Richard?
Well, I think the first thing to say is that probably many businesses, as they start to lean into sustainability issues, I'd like to believe it's all altruism and out of the goodness of our hearts and looking forward to the benefits to our children and the planet. But actually, probably in most cases, it's a response to a problem. So whether it's BP and an environmental problem, or indeed for retailers, certainly the rising costs of energy, we're actually responding to an economic need. So I think to some extent the businesses that have responded fastest to doing things about their investments and about appraisals, it's partly driven by something they can see in front and that's impacting their business. And that probably limits the impact, because not all these things are affecting everybody. We talk a lot about how long-term they are. So I think probably a couple of things. Larger companies will tend to have done more about it just simply because we have more resources. I think businesses are probably doing more about areas like energy impacts, because they're probably affecting all of us. I mean, pretty much everyone in this room, even though we come from different sectors, you'll all have businesses which have buildings. So if I think about us as retailers, most of what we do around sustainability relates to our buildings. Now, whether they're distribution centres, office buildings, manufacturing plants, as I say, we've reduced the energy consumption of those buildings by 60%. That's taken a huge amount of cost out of our business. In my view, pretty much everybody in this room could, if you're not already doing some of the things, you can certainly benefit from those. So in terms of the document, I'd sort of say a couple of things. First thing I'd say is the team have done an amazing job to produce what I think is a very high-quality piece of work. If there was a but for me, it's that, we mentioned SMEs earlier in the day. The document probably is easiest and most accessible for FTSE 100 companies because there's quite a lot of complex concepts in it. What I think we need to do at the same time as educating people about new techniques is I'd like to say that we're actually going to support businesses, possibly SMEs, certainly the people in this room, to actually implement tried and tested environmentally sustainable actions in, for example, their buildings that will both benefit the environment and will benefit your business in terms of better economic performance. So I don't think it's just about financial processes that we need to change. I think there's some things that we can act to encourage and to help businesses to take practical actions today.
Okay, thank you, Richard. I think making this session slightly more interactive at this point, perhaps we can use the voting cards that you've been given. And if I pose the question, do you believe you embed sustainability into your CapEx and investment decisions? I think greens are yes, reds, perhaps there's more to do. Perhaps if we could just see a show of cards. Okay, quite a mixed audience then. Perhaps I could ask, perhaps first of all, from somebody who showed the green card, would you like to share, I think there'll be a roving mic somewhere, if you'd like to share perhaps how you're embedding sustainability within your investment decisions. Obviously as a network and a network team, we've been thinking about this for some time, but it'd be really useful to get some feedback from the floor as to how they're embedding that.
Yeah,
thank you.
Thank you. I'm putting this very much from the SME perspective and how the larger organisation will drive it to us. You set us standards. You say, we want you as a supplier to actually raise your standards. You measure us on our environmental impact. You measure us on our sustainability. And if we want to continue working for you, we have to do it. And it spreads it down. And of course, that triangle spreads out very wide. You don't make it impossible. You just encourage us and say, please, try and do it. Even right down to the living wage, SSE has said we would like all of our supply chain to adhere to the living wage. We do. So it works all the way through.
Perhaps I can just ask the floor then if you would like to pose some questions for us as a panel that perhaps we can take in this area. Are there any areas you'd like to explore in terms of investment appraisal?
Hello, I'm Erica Karp from Cornerstone Capital in New York. My question relates to really operationalizing some of the initiatives that might be termed sustainability as it relates to accountability and incentivization from the top to bottom. Could you talk about some examples of how you get accountability and incentivization for the long term?
Okay. Perhaps Richard, take that question.
Yeah, I think it kind of goes, I'd sort of almost refer back to some extent to Rolf Dieter's presentation. I think ultimately you kind of need a whole system around sustainability. So I think it starts with having a sustainability strategy. Once you have a sustainability strategy, you're going to set some programs behind them and set targets against them. Once you have targets, you're going to need to measure them. And I think the final thing, Rolf Dieter talked as well about personal targets. I mean, in terms of our organisation, we have strategies, we have plans, and we measure the results. Certainly in terms of investment decision-making, we also measure around those investment decisions qualitative aspects such as health and safety measures and so on. The one thing we haven't done yet, actually, is include sustainability performance within individual reward, as Rolf Dieter's company has. That's something we've not done yet, and I think it's an important. I mean, at the end of the day, we're all driven by personal incentives as well as corporate or global ones, and that's one area we have not acted on at the moment.
Perhaps if I could seek any further questions from the floor before I turn and ask the panel. Thank you.
Hi, it's Melissa Carrington from PwC. I'm really interested because I sat in on the CapEx working group. We had a big debate about to monetize or not to monetize environmental and social impacts. And if we do monetize, are we talking about societal value or are we talking about shareholder value impacts? So I'd be really interested in your views on, what the difficulties are there, whether you've done it, what issues you're looking at.
Okay, Gregor, would you like to take that one?
Yeah, I mean, we had some good discussions on this, and it's just, personally, I think it's societal value because ultimately that creates shareholder value. I mean, there's simple things that you've got to do with the community. I mean, we've quite clearly got a contrast between our coal stations and what we're doing on building wind farms. And you've got to encourage the community. You're going to create a lot of issues on construction, pollution, visual amenity. And what we've found is that creating community funds and increasing them over time has been important. That costs the bottom line. It costs us money. It costs our shareholders money. But what it means is that the community feel they're getting something out of it, as well as the company. So I think, and employment, at some stage, and we're a GB company, very focused in Great Britain and Ireland. We need to be looking at the supply chain. And quite honestly, one of my personal kind of disappointments in the UK is that we've failed to get the supply chain in for renewables. Siemens have done a very good job recently, but it's taken far too long. And if I look at the supply chain in Scotland, that isn't as good as it should be with all the renewables. So I actually think, employment, societal kind of impacts through some of the regional areas is important. It might cost you more, but ultimately you'll get the long-term benefits. And picking up what Ian said, the living wage, for us was something that we felt was very important pushing forward. That costs us money. But as big companies, we're spending a lot of money on marketing and these type of areas. I can tell you as finance director, we get a lot more money for our buck on that one than we do on our marketing. It's been a very good focus. And we've progressed that to be the first FTSE 100 company to get the fair tax mark. And these are the type of things that are difficult to value, they have a cost, but they're important to take forward. So I think ultimately it comes back to shareholder. If you don't do it, you'll lose shareholder value in the long run.
Greg, you just touched on listening to your response there, you touched on this idea about a community fund or indeed a kind of a special pot or a ring-fenced fund. Is that something that you think is a good idea to kind of be a catalyst in this area for sustainable investment?
Well, I think you need to look at every investment and assess, what impact it has on the community. Particularly for wind, we as a company led the market and felt that we needed to do something for the community. We needed to get community on the side. And some of you in the room will say, well, was that a bribe? No, absolutely not. These are going into real community schemes, and we've split the money locally 50%, regionally 50%, and we have Jack McConnell, Lord McConnell, who was First Minister of Scotland, administering that regional fund, putting money back into the community in sustainable projects. Very good projects that we're doing up in the north of Scotland. One of them keeping parts of the Caledonian Canal going. I think it's something that clearly you're seeing it in one or two other areas, but it depends on the type of capex that you're spending. You can't apply it to all.
Mm-hmm. Richard, have you any views on a ring-fenced fund or a pot for investment in this area?
I think it probably depends on the type of spending you're making. I mean, certainly, again, from a retail perspective, as I say, the lion's share has gone on energy efficiency in our buildings. And then more latterly, looking at changing the way in which we interact with our supply chains and our suppliers and demanding more of them. And because of that, we've not actually had to ring-fence funds, and not least because all of those funds have had to generate the same level of return as any other investment. Indeed, they do so. They have short paybacks. They're relatively predictable. I think as you start to move along the agenda from potentially just energy and resource-related issues into some of the things around more social capital and those kind of areas where the monetisation point is more difficult, then I think potentially you do need to start thinking about ring-fencing. I think the other topic that comes onto the agenda is not something that we've done, but certainly green loans and the like, and you get into the investor community, there certainly seems to be pretty strong evidence that proves the case that actually sometimes the cost of capital can be lower if you're a proven sustainability company. I think it's probably horses for courses, is what I say. We've not needed to do it thus far, but whether we need to in the future, I think is probably an open question.
You just touched on investors there, Richard. Do you think investors need to think differently to enable companies to invest sustainably? I'd to pick two parallels here. All the thinking that we've done around investors has actually been around communication from our perspective. And there was that comment about 60% think that there's no demand from our decision makers around sustainability. And both of these areas, and the investors don't ask us. So both of those statements to me show that we're failing in one respect. It says that we're being reactive. And the fact is we have to be proactive in this area. So, Andrew talked about investors. I don't for 1 minute believe that investors will not be interested in this agenda. It's just about us both taking the responsibility and setting the strategic agenda and then communicating around that agenda with the investor community. If, as Rolf Dieter said, it's a key part of your strategic agenda, then you will measure it. If you're going to be measuring it, you're going to be talking about it every time quarterly you're talking to the investor community. And so then it becomes a key part of what your business is doing to achieve both financial success and a sustainable future. So I guess what I'd say is I think the onus is on us to drive that agenda. Okay. There's a question from the floor there.
What quality standards do you have in all the procurement that you do as companies? Because that's one of the most effective ways of driving this across the work that you do.
Okay, thank you for that.
Real examples would help.
Okay, so supply chain and procurement.
Okay. We're on a journey on the supply chain. To be honest, we've I just talked about the living wage. We've asked all our contractors to do living wage. We think that's the right thing, the responsible thing to do. We've got two of our largest suppliers. We're going through a review at the moment, right back to the source for a lot of their supply chain and getting into that into a lot more detail. But I'll be honest, we're not as far ahead as I would like, but it is on my Director of Procurement's top 3 bonus targets this year, so I expect it to be pursued.
I think for a retailer, this probably falls into 2 pots. We very much think about what we call GFR and GNFR. GNFR is often referred to as got no friends. That's buying the things that we don't sell. So everything from steel to build buildings to energy, for example. So on that side, certainly we set targets around energy from renewable sources, for example, around the world. I think probably there's more change been happening in the products that we sell, so in those supply chains. And a lot of that comes around as much from consumer thinking and what they demand of us as good businesses as anything else. So, I mean, you know, an infamous example would be horse meat in the supply chain. You know, that's because most of that came about because of a criminal element in complex supply chains. That's driven, I think, two big changes for retailers. It's driven, I think, a different level of accountability that we feel for every single element of those supply chains, and therefore it's required us to put new standards in for testing and the level of governance that we put around suppliers to get into our supply chain. And I think the second thing it's done, is which actually is a good thing from a cost perspective with my CFO hat on, is that it's caused us to look very hard to simplify those supply chains because, frankly, they were too complex. So I think for retailers it probably falls into both camps, and probably the acceleration in importance from a retail perspective is probably as much on the product side as it is on the procurement of goods not for resale.
Thank you. Time for one more question. I think there's somebody right at the back with a hand up.
Yves Mulder with UNEP. I was wondering if either the panelists or other members of the CFO leadership group have started within your company to see how sustainability issues could be incorporated in discounted cash flow analysis as a way to see how how sustainability could impact capital expenditure under different types of scenarios. And we've heard from Mr. Schwab that there's a lot of megatrends. Is it possible, with some bright minds within your company, to see how that could impact the internal rate of return of that?
Okay.
Well, that's what I said about dynamic investment appraisal, where ultimately, you know, you're bringing in some of those more qualitative issues into quantitative. So going right back through the supply chain, scoring that and putting it into bound notes in terms of differentiating between suppliers and having it as a real decision maker rather than saying, well, that's something that we might consider. Actually hard coding it into your investment appraisal is ultimately where you've got to get to. I think, you know, within the next 5 years, you will probably see some companies doing that. We're seeing companies doing it with the EPL, so Puma are doing it. I think you'll start seeing similar things happening in capital appraisal.
No, I think that's right, and I think as a water company, then you know we have to look at scenarios and model those into the future for the long term and understand how that affects capital investment decisions. I think from a retail perspective, Richard, have you got any comments on that?
Yeah, I mean, I think it goes slightly back to this point about you know to value or not to value. So the answer is that an increasing number of things enter into specifically the cash flow analysis, so certainly the energy-related ones that I've already talked about, but certainly areas like carbon taxes, you know, costs of landfill and so on. So many new things which are now having a cost attached to them appear within the cash flow analysis. The other thing, though, is that you can't do that for everything, but there may be some other things that you don't have a financial value which you can set a hurdle rate. So beyond the cash flow analysis, there may be some health and safety minimum targets and standards that you set that regardless of the return, if a project doesn't meet those standards, it just doesn't happen. So I think you need to have a balance between those things that can be financially measured, which should be in the cash flow and generate a return, and then there are probably some things that which are still measured more qualitatively, but which you can still set standards for and adhere to in every investment that you make.
I don't disagree with that, but I think sometimes then it becomes a softer issue in management. If it's built into that investment appraisal, particularly if you've got a contractor that's a lot lower price, but their health and safety performance is very poor. And what we've found is that health and safety performance, actually, if it occurs in the project, when a big infrastructure project, it actually costs you more money than it should, and you don't build that into your investment appraisal. But I think it's different businesses have different kind of bases for that.
Well, I think, yeah, just to reinforce that, I think what we're describing is there's kind of a process whereby more and more of these things become measurable over time. And basically what I expect to see is that more of them will appear in strongly valued and in every investment appraisal. And some of them are a bit further out on the horizon, they're a bit harder to measure now, but I suspect in a year or two's time they will be embedded in most people's appraisals.
Okay. So a dedicated and at first sceptical, by his own admission, but now passionate group led by Stuart Humphreys at National Grid has obviously been looking at this area and culminated in the practical guide that obviously will be issued today. What do you think the next steps are for this project? So from a leadership network, what do you think comes next?
Well, I think we now need to get into the practical outputs. There's been a lot of shared learning. I think Richard might talk about his 10 or 15-point plan for SMEs. I'll leave that with him. That we were talking about last night, which I think is a great idea. And I think it's, what I was saying, embedding some of those more qualitative issues into the investment appraisal. As I said earlier, we're on a journey. We're moving forward on that journey, and it's not going to happen overnight, but I think you're seeing real movement. And I have to say, reiterate, it's a great document. You know, I'm surprised we managed to do that in the space of effectively 6 months, really, maybe less than 6 months, maybe 4 months. The next step is to kind of share experiences and actually move forward in developing investment appraisal to the next level.
Richard, key message for the audience, perhaps?
Well, yeah, I'll answer that question and then takeaways. I think there are basically two areas where we need more action. The first one is for more organisations to understand through the work that we've done in our communication and engagement how to embed more sustainable thinking into their investment appraisals, and I think the work has been done. Now the opportunity is to go from 16 network members to 45 people this morning to 250 in this room and to all of the contacts that you have. But we've talked a lot about practical action as well, and what Gregor was referring to was really that there's one thing around changing processes which will impact infrastructure spending, which will impact things over the next years to come. But as I've sort of said, there are many tried and proven sustainable technologies that many of us are already deploying in our buildings, for example, which I see no reason why we couldn't spend some time supporting smaller companies to do the same things. We have the knowledge both of how to do it, we know what the return's going to be, and we also know the suppliers that you need to embed those things. So I wonder whether, when we're here next year, whether in addition to saying we've got some people embedding techniques, we might be able to say that 500 additional companies have implemented LED lighting in their buildings, for example. So real practical action. And I think in some ways that will probably have more resonance for the non-finance community than probably just talking about the investment appraisal techniques will.
Okay, thank you. Gregor, last thought?
I thought you were going to talk about your A4S standard mark.
Oh, that's it. Well, yeah, maybe I was waiting until Prince Charles arrived for that.
Say it twice.
Here's an idea which maybe we'll leave for this evening. There was a thought that everybody likes, if you look at the feathers and the kite mark, that we might actually be able to encourage some of those SMEs that if there were 10 things that they could implement and they implemented all 10, maybe they'd get a gold one of those to put on their business logo, which I think might be good to encourage them, and possibly a silver for 5 of them and so on. But maybe we should talk about that this evening.
Yeah, it's always good talking these things through over a glass of champagne, isn't it?
Yeah, well, not if it's Sainsbury's champagne.
Right, Gregor, Richard, thank you very much.
Thank you.